Holdings Plc has reported a 15.4 billion shillings profit after tax for the first quarter ending 31st March 2025. Releasing the results, the Group Managing Director and CEO Dr. James Mwangi said the outcome was a result of Equity's diversified business model.
We pass as the fastest growing region in the world because it's infrastructure-led, it is population growth-led, it's increasing GDP per capita, it's agriculture with significant opportunity to address global food insecurity. Equity wouldn't have been in a better place.
In the period, net loans increased by 3% to 804.7 billion shillings. Total assets increased by 4% to 1.7 trillion shillings from 1.67 trillion shillings, while customer deposits grew by 7% to 1.32 trillion shillings.
It's a market-led growth, and it means we are connected with the market, and it's the market that is the most promising market in terms of activities in the world.
The group achieved the strong results and growth from its diversified business across the region, becoming a regional systemic financial services provider.
Rwanda, we are the second largest bank there. Uganda, we are the fourth largest bank. Kenya, number 2 largest bank. DRC, second largest bank. We are systemic in the entire market, in the entire region.
Kenya Subsidiary showed recovery, registering 7% growth in deposits to 792.7 billion shillings. Non-funded income increased by 23% to 7.57 billion shillings, which resulted to a 50% increase in profit before tax.
That led us then to look at efficiency around how we operate as a business, looking at that from how we fund the book, how we price that book, and that's where has been the biggest win. We still have a lot of headroom to really drive efficiency around the operational costs area, but the biggest prize is revamping in growing the loan book in the coming quarters.
The group's regional subsidiaries continue to be strong contributors to the growth trajectory, contributing 45% of the profit before tax.
Kenya is now 53% of our deposits, and the subsidiaries are contributing 47%. Essentially, 50% of our balance sheet is outside Kenya.
Equity Bank Tanzania recovery momentum continued to manifest itself, with deposits increasing by 14% and loans by 9%.
Very good performance in Tanzania. Interest income 9% up, non-funded 17%, cost of funds stable at 4.7%, yields up to 13%, net interest margin expanded from 7 to 8%, and as a result, actual profit is up 540%.
With Equity BCDC, that plays a pivotal role in anchoring the group's Africa Recovery and Resilience Plan (ARP), the regional performance reinforced Equity's strategic positioning as a cross-border financial powerhouse.
It drives, that momentum to really make sure we can continue to sustain the challenges, which I believe are opportunities for us to continue to transform the lives of the people, not only for Congo, but for the rest of Africa.
The group's non-banking subsidiaries, including investment banking, fintech and insurance, continued excellent performance, supporting revenue diversification. Insurance business continued to deliver good results, with profit before tax rising 27% to 414 million shillings from 321 million shillings previously.
What really excites us is not a profit, is that we have been able to increase inclusion of insurance to an incredible level. We launched this year, January, general insurance, and our first 3 months we've been able to write premiums of 1.4 billion, revenue of 281 million, and build assets of 2.5 billion.
In the period under review, Equity Group continued to invest in technology, infrastructure and diversification, modernizing its digital channels, which now process 87% of all transactions.
Branches are only handling 1.8% of the transactions. Now people have moved to digital. They no longer need the bridges So huge structural change in people's behavior. And that is really something we are glad we caught up early, because we are able to drive that.
The group continued to deliver significant social impact across the region, reinforcing its commitment to inclusive development.
To date, we are 137 medical centers. But look at the number of patients, 3.7 million patients. So it's not about clinics, it's the service you are giving. And it's not about service, it's the quality of service, the affordability of service. This is disruption of the health sector, so that you can bring affordability, you can bring dignity, and democratize health.
The group's unwavering efforts in financial literacy, innovative solutions, and dedication to quality, reliability, and excellence in the financial services sector did not go unnoticed. Indeed, Equity Bank won 16 Top Think Business Banking Awards, where Dr. James Mwangi was named CEO of the Year. Equity is optimistic about growth prospects, given that the region it operates in is globally competitive and visibly one of the fastest growing in the world.
We have a supportive global monetary environment. We see a weakening dollar that is good for the region. A possibility of interest rates continuing to be cut. The lower interest rates are good for the region. So there is quite a bit that one would see a long runway and a high headroom of wealth creation opportunities.